Yes, the third candlestick is the most important one in a fair value gap. Why? Because it holds a huge secret. It can tell you whether a fair value gap is either high probability or low probability. Hence why in today's video, I will show you how you'll be able to use this secret in order to identify these high probability fair value gaps and avoid the low probability ones. I will firstly show you step by step how it's done. And secondly, I will show you how I personally use this secret on a day-to-day basis by going over 2 trades I took and also sent in my SMC trading group using, of course, the bar replay mode. So if that sounds interesting, let's hop on the charts. In order to understand the secret that the third candlestick in a fair value gap holds, you gotta be able to identify the momentum of it, the momentum of that third candlestick. If the momentum is high, then we have a high probability fair value gap. If the momentum, however, is low on that third candlestick, then we have a low probability fair value gap. Now, let me hop on the chart and show you some few examples for a much better understanding. But before I do that, let me briefly show you how to identify a bullish and a bearish fair value gap in case you don't already know how to identify those. Before I continue with the video, I briefly wanted to mention that if you want to get access to the trades I am taking on a daily basis, you should go ahead and join my SMC trading group. It is the first link down below in the video description. Let's start off with the bullish example. We need 3 consecutive candles and we gotta ask ourselves if the top of the first candlestick is or isn't overlapping with the bottom of the third consecutive candlestick. If they aren't overlapping, then we have a bullish fair value gap. Okay, right here, super clear to see it. Now for a bearish fair value gap, once again, 3 consecutive candlesticks, we gotta ask ourselves if the bottom of the first candlestick is or isn't overlapping with the top of the third consecutive candlestick. In this case right here, we can see that they aren't overlapping. Hence why right here we have a bearish fair value gap. Now that we know how to identify a bullish or a bearish fair value gap, let me show you why the third candlestick is so important. Let's start off with the low probability example. So right here, as we can see, we have 3 candlesticks and we have a bullish fair value gap. Why? Because the top of this first candlestick isn't overlapping with the bottom of the third consecutive candlestick. So right here, we have a bullish fair value gap. Now, we gotta ask ourselves, is this a high probability fair value gap or a low probability? In order to identify that, we need to look at the third candlestick of that fair value gap, which in this case is this one, and ask ourselves, is this candlestick a high momentum or a low momentum? In my opinion, this is a low momentum. Why? Because we were moving to the upside and all of a sudden price found a resistance here, bounced from it and went towards the downside. So yes, we still have a bullish fair value gap here, very valid, okay? But this is a low probability bullish fair value gap because of this third candlestick that tells us the secret, that tells us that, hey, this right here is low probability. And if we play the price, we can see that right afterwards, price went right through this fair value gap without respecting it at all. Okay, so once again, this was a low probability example. Now let me show you another one. Right here we have another low probability example. We have a bearish fair value gap. Why? Because the bottom of the first candle isn't overlapping with the top of the third consecutive candle. We can all agree that we have a very clear bearish fair value gap. Now, to identify whether it's a high probability or a low probability, we gotta take a look at the third candlestick and ask ourselves, once again, is this a high momentum or a low momentum candlestick? And we can all see that this is a low momentum because price was bearish, okay, with this big candlestick. And here we would expect for that bearish momentum to continue lower. However, price here found a support, rejected from it and headed towards the upside. So because of that, because of the third candlestick, this right here is a low probability bearish fair value gap. And now we can play the price and see clearly that it wasn't respected. All right, that's why I wouldn't have took this fair value gap right here. That's why I wouldn't have traded it. All right, so now let me get into the high probability examples. But before I do, make sure you are subscribed to the channel to not miss out on any future uploads. So right here we have a very clear bullish fair value gap. We can see that the top of the first candle isn't overlapping with the bottom of the third consecutive candle. Now, to know whether it's a high probability or a low probability, we take a look at the third candlestick and we ask ourselves, is this a high momentum or a low momentum candlestick? It is clear as day to see that this is a high momentum candlestick because it continued this bullish move, this bullish push towards the upside. Because of that, this right here is a high probability fair value gap that I would personally take in consideration. Okay, now we can play the price and see how it reacted to it. Let's see. Okay, we can see it mitigated. We could have took this unmitigated demand level based on this fair value gap, because that's how I basically trade supply and demand based on fair value gaps. And we can see that price respected it. Okay, it would have been a very, very beautiful trade. Now that you guys know how to identify the high probability fair value gaps and avoid the low probability ones, let me show you how I personally use this method on a day-to-day basis by going over 2 trades that I took and also sent in my SMC trading group. The first trade I will go over will be on AUD USD. Right here, I opened the chart and right from the get-go, I saw a very beautiful bullish fair value gap. Okay, it is very clear to see this one. First candle, second candle, third candle. The top isn't overlapping with the bottom, hence why we have a bullish fair value gap right here. Now, in order to see whether it's high probability or not, I took a close look at this third candlestick and it was very clear for me to understand that this right here was a high probability fair value gap because we can see the huge bullish momentum of this third candlestick. After that, I marked up this unmitigated demand level. Okay, I also saw that price broke structure right here with this impulsive move. And when I look left, I saw that liquidity was swept as well. Okay, I then placed a buy limit right on this unmitigated demand level. The stop loss was right below it. And the final take profit was at 1 to 3 risk to reward ratio. And of course, I've sent this one in my SMC trading group as well. Now we can play the price and see how it played out. And of course, feel free to join the SMC trading group. It is the first link down below in the video description. As we can see right here, it triggered for a very beautiful sniper entry and went straight to the upside afterwards and smashed all of the targets right here. Okay, so we can see it was a very, very beautiful trade that had next to no drawdown, was a very beautiful snipe, went straight to the upside and smashed all the targets. And the reason I was able to take this trade is because I was able to identify this high probability bullish fair value gap. Now let me go over the second trade. The second trade was on NAS 100, and right here when I opened the chart, I saw a very clear bearish fair value gap. We can see that the bottom of the first candle isn't overlapping with the top of the third consecutive candlestick. And after that, I took a very close look at the third candlestick and saw it was a high momentum one. Hence why this right here was a high probability bearish fair value gap. After that, I then took this unmitigated supply level as my point of origin based on this bearish fair value gap. I also saw that price broke structure very aggressively right here, and liquidity was swept as well right here with this fake out to the upside. Having all these confluences in place, I then placed a sell limit right on this unmitigated supply level. The stop loss was right above it, and then the final take profit was at 1 to 3 risk to reward ratio. And of course, I've sent it in my SMC trading group as well. Now let's play the price and see how it played out. We can see it took some time till this trade finally triggered. Right here, it triggered for a very nice sniper reaction, as we can see. And in around 1 hour, it smashed all of our targets. Once again, a trade that I took based on that high probability fair value gap. So y'all can see how important it is to understand this secret. You understand that the secret that the third candlestick in a fair value gap holds. Hopefully you understood everything I discussed about in this video. If not, please let me know down below if there's any unclarities or if there's any questions. I'll make sure to check this out. And till next time, if you have any video ideas, drop them down below. That'll be very much appreciated. Feel free to share and like this video if you found it valuable. And a very important video will pop on the screen right now. A video where I share some things that I wish I knew when I started trading, things that would have made my journey towards profitability a lot easier. So make sure to go ahead and watch that one. And on that note, I want to wish you all the best and take care.